In this video, I want to run through how to play the low time frame system itself only. So once you load up the 5 or 15 minute chart, these elements are going to auto-populate. The only one that won't, if you didn't have it turned on originally, is the trend cloud and the lower line. But you don't have to have the lower line on, but I've got it turned on this time anyway. Also, what won't auto-populate is the continuation signals. So the way to play this, which I've covered in loose detail before, these elements are all in place so you don't have to bother with support and resistance, even though it is a good idea to do it at a high time frame. You can do without it on a purely scalping level. This information gives you a decent amount of structure to work off, and you already have the key open levels here anyway, such as the daily, weekly, and wherever the monthly is. But for argument's sake, let's go up to the hourly and just put some levels very quickly for us to work off and to have a look at. So first and foremost, let's go to 15 minute. Okay. So the rule of thumb here, when price action is going up, this has turned positive, so it's gone underneath. So price is going up over the longer term trend, and the trend cloud is also, in this case, blue and is going up. Then you would want a long. And our continuation signal there gives us a nice place, an opportunity to scalp from. This trend cloud on the lower time frame, think of it as an early warning system that trend is changing. We also have the bar color itself. You can see it doesn't truly change, but it does here, gives us an indication alongside the trend cloud. But sometimes, we've got here, it may stay positive longer. The bar color is running its own calculation. We've got the trend cloud and we've got the bull bear line. So the bull bear line, as I mentioned before, is more of a laggard. It's more of a longer term. You can self-tune these however you see fit. The way I've tuned them as a default across all pairs may not work for that specific pair depending on the price action. So this element you can tune. So let's go in and have a look. Actually, just to circle back to the rule of thumb, just on the default, that is, would you take this trade? So the fact the trend cloud has changed would come off this resistance area, but this is still positive, means this would be, for me, probably a risky trade until we see some better confirmation, even though in the end it went to 154 pips. I would probably have waited until the bull bear line changed and I was shorted from there, if you want to be super safe about it. Because even this continuation is off the back of a great stretch of price action heading up. That was the top, that was it. It hit this resistance before we marked our level, it hit this level, tried to come again, pushed down, did one final tap up and then came crashing back down. So it's always good to wait for confirmation of the bull bear line and the trend cloud. If you want to be daring, you can take the trend cloud signals, but have the bull bear line within context. But at some point, and this is a wonderful stretch of price action here, if you would have caught it. At some point, because of chop, and I know we're on the 15-minute, but the bull bear line combined with the trend cloud is going to give you tighter price action and maybe feel like it's mixed signals. So because the purpose of this is to get you profit and in and out of trades quickly, you should always be ready to cut it if and when it hits the mean reversion bands or a particular level. And unfortunately that is not a great trade there. But we had at least one set of information that was telling us the price action trend wasn't great, and that is the bar color. But I wouldn't also take this trade either, because the trend cloud has changed and it's tapping on a mean reversion band. This one, I would have waited perhaps for confirmation, or put a very risky trade in when the bar color changed. So let's just show you. But this continuation signal would have been a bit of a sign that things are going to head down combined with the bar color, and we know the bull bear line is slightly a bit of a laggard. So if you wanted a risk, if you wanted a risk and put your stop loss up here above the lower line, it would have worked out well for 129 pips, or at the very least 100, just about 100, or about 70 to 80, say, when the trend has changed, and that's when you know it's time to get completely out. So for this instance here, you wouldn't want to take this trade. The bull bear line has been positive for quite a while now, a couple of days. You've had nothing but positive signals that the trend is up, and continuation signals that the trend is up. The bar color and the bull bear line in this instance, and maybe our target, say, of up here, means that would be a bad trade to take. It's not valid by the rules. So let's tune the bull bear line. So this is where you tune it. These are the defaults. On each time frame. So we're on the 15-minute. So let's change it to 4 and 7. So you enter in your number. Let's do it to 5 and 10 actually. Enter in your number, and then you tick these boxes to use your number. Click OK. We can see it recalculating, and there we go. You just saw the change right there. So this is helpful if you want the bull bear line to be much, much sharper. But it's going to, by doing that, it's going to undo its own purpose, which is to be a double confirmation of the trend cloud, but operate on a longer trend. Because the trend cloud is scalpy in nature by itself. That's what it's designed to be, scalping. We'll offer as many scalping opportunities as possible. But on the lower time frame strategy, the bull bear line is designed primarily and tuned specifically to show you what's the real true trend here. And you take actions on the trend cloud within that. So that is, in a nutshell, the low time frame strategy. Try to keep it nice and simple, but also give you an element you can tune.